Let's take a look at some key setups I'm watching for the week of October 4th on this week's, the first of many, setup of the week. So I've got ETH USD on the left here, BTC USD on the right here. And this goes without saying, but in the US at least, there are a myriad of outside influencing events here. I'm unfocused on those. I'm laser focused on the chart. If you're unfamiliar with the indicator here, this is the Ichimoku cloud, which paints dynamic support and resistance and tries to project the trend ahead of price. So when price is in the cloud, as it is for ETH and BTC, that represents a no trade zone. To me, it represents a pay attention zone, because if price moves above the cloud, that is a long entry. If it moves below the cloud, that is a short entry. We've been about as sideways as we could be for the past month or more since the drop off early September. Based on the cloud, the key levels I'm watching are certainly the cloud itself, which represents, again, dynamic support and resistance at each level. But more importantly, I'm watching the Kijun, this red line, which represents the mean of price over the past 60 periods based on the settings I'm using. So for ETH, it's real simple. It's 400. That's the level. For BTC, it's 11111. Both are interesting psychological levels in that even round numbers for ETH. For BTC, it is another different type of psychological level, just repeating numbers. So the first step, breaking the cloud in either direction. The second step, if it is a long trade, would be breaking the Kijun, the red line. And the third step would be a bullish TK recross above the cloud, as was seen for BTC in August. You can see so this is a bullish TK cross, the blue over the red. Then you had your bearish TK cross, red over blue. It just means the mean over the 60 period is greater than the mean of the 20 period. Then that flipped, and that's your long entry signal. So ultimately, that's what I'm looking for here. Ideally, this goes slow like it did here, because if it goes slow, then your entry is smooth and easy. What I don't want to see if I'm looking for a long is a candle. It's like a $500 candle with no possibility to enter the trade slowly. Upside resistance is always local highs. Local highs, the numbers don't matter as much, but 500 works for ETH, 1200 for BTC, ultimately 18K if we break the range to the upside for ETH. 750 is possible if we break the range to the upside. Now, because this is an if this, then that decision tree, you need to look at both sides of the coin here, because if this drops below the cloud, for ETH, we're looking at previous local highs as well, 280, 250 range for a near-term target. For BTC, it's a little tighter because the previous local highs are essentially where the local lows are sitting. So anything below 10K may flirt with 8.1 ultimately, not based on this chart, but on higher time frames. You're going to see some reaction at the previous level at 9.5 if we break down. But ultimately, I like 8.1 as a nice support target. Another thing you can watch for is, okay, chart patterns. Is there an inverted head and shoulders here on ETH? Not really. Is there a W double bottom? Not really. Are they not there? No. Descending volume profile. Massive descending volume profile for BTC. With BTC, you could argue some sort of equilateral triangle, which after a down move could have a down bias. So there's just a bunch of 50-50s here. And for me, there's no real reason to be in a trade right now until these levels break. Another way to look at momentum is to look at the oscillators. You don't need to know anything about them other than if they're in the middle. If RSI is 50, it's about as even as it could be trend-wise. If RSI is 100, it's overbought. If it's 0, it's oversold. For MACD, we're also seeing on the histogram just no momentum whatsoever. We're seeing the line graph bearish. It's below 0. It's below the median. I don't know. It doesn't matter. The point is it's about as zeroed out as momentum as it could be. And lastly, just to show another different type of trend indicator, the pitchfork, 3 points projecting a trend to the upside. In this case, this brown zone is where price wants to be, where price wants to live. Again, if you think of this as an oscillator, overbought, oversold, ETH is exactly where it should be based on this trend, in that it's at the median line, at this yellow line. This yellow line always acts as a magnet for price because it is the median, the mean of trend. BTC is a little different. It's in this green diagonal zone. But again, when I call 18 for BTC, I'm looking at this specifically. I'm looking at the median line. Where does it sit? It sits at 18. 750 for ETH is somewhere in the overbought territory or approaching the overbought territory. 8.1 for BTC would be approaching the oversold territory. 250 to 280 would be this diagonal zone in the pitchfork here. So it all might seem like voodoo to those who are unfamiliar with technical analysis. But at the end of the day, the price has history, the price has memory, because the price is people at the end of the day. And everyone's looking at the same chart. They're looking at the left side of the chart to try to predict the right side of the chart.